In December 2012, the Auditor General released his report on the Government of British Columbia's financial reporting for fiscal year 2011-12. The following presentation provides an overview of the report. To read the full report, visit our website at www.bcauditor.com. Every year, the provincial government releases its audited summary financial statements to the public. The summary financial statements report the consolidated financial results of the government reporting entity. That entity includes the Legislative Assembly, all legislative offices, including the Office of the Auditor General, the Office of the Premier, all ministries, and 148 other organizations, including Crown corporations, school districts, universities, colleges, and health organizations and their subsidiaries. The summary financial statements, part of government's public accounts, are an important document for the people of British Columbia. They provide an indication of the financial well-being of the province and accountability for monies used by government over the fiscal year. The public accounts also include unaudited information, such as government's financial statement discussion and analysis report, and information about the Consolidated Revenue Fund and the provincial debt. Under the Auditor General Act, the Auditor General is the auditor of all central government operations, including all government ministries. Every year, the Auditor General provides an audit opinion on the summary financial statements. This report is written to inform legislators and the public about the Auditor General's opinion on the 2011-12 summary financial statements, and to discuss significant findings resulting from the audit. The report is also intended to encourage improved practices in financial reporting and management. The report covers a number of different topics, including 3 key issues that resulted in 4 recommendations, 3 qualified audit opinions, 8 issues of significance discussed with management, and the number of outstanding recommendations and management letter issues. The 3 key issues in this report are changing accounting and auditing standards, the information presented in the financial statement discussion and analysis, and control issues in government organizations. These 3 key issues resulted in 4 recommendations to government. The first key issue relates to accounting standards in Canada, which have undergone a significant change over the past few years. As a guideline, governments should always choose accounting policies to record and report transactions that reflect best practice. In Canadian accounting, this means following Canadian Generally Accepted Accounting Principles, or GAAP. In BC, the Budget Transparency and Accountability Act requires the provincial government and its organizations to conform to the set of standards and guidelines that make up GAAP for senior governments in Canada. However, government amended the Act last year so that they could modify GAAP. One of these modifications allows BC Hydro to implement a U.S. accounting standard. The implications of this change are discussed on page 12 of the report. The second modification relates to accounting for government transfers. Changes to accounting standards meant that some government organizations received a compliance opinion, stating that their accounts complied with government regulation as opposed to complying with GAAP. We expect there to be many more compliance opinions in 2012-13 due to schools, universities, colleges, and health organizations transitioning to public sector accounting standards. As a result of these changes, we recommend that government report to the public in accordance with accounting standards developed by Canada's independent standard setters. The second key issue is understanding financial performance. The public accounts contain a financial statement discussion and analysis, or FD&A. Its purpose is to enhance users' understanding and demonstrate accountability. Government's FD&A provided some information, but it was not contained in one document and did not always tell the full story. For example, it did not explain the updates to financial forecasting or how the actual results for a year compare to the original budget. A second area in understanding financial performance deals with balanced budget issues. For the province to balance its budget, it must balance its external revenue sources with the expenditures of all of government. To meet this goal, government requires organizations to report an operating surplus each year. This can result in excess working capital in government organizations and a focus on short-term performance. For 2011-12, there was a reported deficit of $2.9 billion that was offset by surpluses in government organizations for a final result of a $1.8 billion deficit. We made two recommendations for this issue. First, the government provide all relevant information within the financial statement discussion and analysis, supported by financial statement results, to explain how it performed as fiscal stewards of public funds. Second, the government review how accountability frameworks, including annual balanced budget requirements, interact to influence decision-making across the government reporting entity. The final key issue deals with unresolved control issues. All significant control deficiencies identified by the auditor are brought to management's attention in a management letter. Management has the responsibility to weigh the costs of fixing them. We expect management to assess whether they agree with the issues identified, determine the urgency of each issue, and estimate the time needed to make changes. However, across all of government, approximately 20% of the issues identified in management letters were not responded to. We also found that there is no process in central government to track outstanding issues or hold entities to account for resolving them. Therefore, we recommended that government implement a process to ensure that all management letter points are followed up and resolved on a timely basis. The next topic in the report relates to qualified audit opinions. A qualified opinion indicates to the users of the financial statements that some of the information is not auditable or could be misleading. This is, and should be, a rare occurrence in the private and public sectors. There were a number of reasons why the summary financial statements for 2011-12 were qualified, and two of these have persisted over multiple years. The Transportation Investment Corporation, responsible for constructing and managing the Port Mann Bridge, was improperly consolidated. Had it been done correctly, the recorded deficit would have been greater by $79 million. Deep well credits, which are used to reduce the amount of royalties that gas producers pay, were not provided for. Had these credits been correctly accounted for, the deficit would have been greater by over $700 million. Government transfers, which refers to accounting for funds that are transferred from one level of government to another for a specific area, were inappropriately deferred. As discussed earlier, government has chosen not to follow the changes to GAAP in this area. Recorded correctly, the deficit for the year ended would have been less by $279 million. Finally, government failed to disclose required financial information about government business enterprises. In addition to the four items previously discussed, four other matters of importance were discussed with government management. First, during our audit, we discovered a number of errors in the summary financial statements, and we expect them all to be corrected unless there is disagreement with our correction. We found 93 errors, of which 35 were corrected and 19 were disagreed with. This leaves 39 where no action was taken. Second, we also continue to note that there are large amounts of cash and temporary investments being held by entities outside of central government. Since government must borrow money to fund some of its expenditures, it does not make financial sense for other funds to sit unused in a bank account. Third, the province had total capital lease obligations of $184 million in 2011-12, but only disclosed information about one lease, or $11 million of the total. Adding just 3 more leases to that disclosure would allow government to provide information on 90% of the outstanding total. Fourth, the Provincial Capital Commission was restructured, which resulted in a change to how it was accounted for by government. The change was incorrectly included as a prior period adjustment, which could leave the reader confused as to why the opening balance for the year does not match the closing balance from the prior year. The next topic covered in the report is management letters. As mentioned earlier, a large number of management letter issues were ones that had not been resolved from the prior year. Looking at themes from year to year, we found larger increases in the number of issues relating to accounting policies, system controls, and IT system security. A detailed overview of management letter issues can be found in Appendix 2 of the report. In our 5 previous financial observation reports, we had made 62 recommendations, including the 4 we make in this year's report. Of those 62 recommendations, 14 were made in more than 1 year. We have decided not to pursue another 6 recommendations, and 30 are still outstanding. The full list can be seen in Appendix 3 to the report. That concludes the summary of this report. For a copy of the report or more information about our office, please visit our website at www.bcauditor.com. The Office of the Auditor General encourages your feedback on this report, as well as your suggestions for further audits. We look forward to hearing from you.